Today, we're diving into one of the biggest names in tech, Microsoft. We'll be looking at their financials, stock performance, and whether or not you should consider adding Microsoft to your portfolio. So grab your coffee and let's get right into it. Microsoft Corporation, founded by Bill Gates and Paul Allen back in 1975, is a tech giant that's become a household name. You probably know them from Windows, the Office suite, Azure Cloud Services, and of course, the Xbox. But beyond the products we see every single day, how does Microsoft really perform as a stock? Let's start with the fundamentals. This is where we look at the company's basic financial health. In the last quarter, Microsoft earned $60.9 billion in revenue. While it's only a small increase compared to the previous quarter, it's still a 16.23% jump compared to last year. That's a strong sign that the company is consistently growing. Now let's talk about net income, which is essentially Microsoft's profit after all expenses have been paid. Last quarter, their net income was $21.9 billion, which is almost 20% higher than the same quarter last year. This shows that Microsoft isn't just making money, they're keeping more of it, which is a great sign for investors. Another important metric is EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. Basically, it shows how efficiently a company is running. For Microsoft, EBITDA was $29.4 billion, up 21.76% from last year. This means that Microsoft is managing its costs well and becoming more efficient, which is great for long-term profitability. One thing to watch out for though is Microsoft's price to earnings ratio, or PE ratio. The PE ratio compares the stock price to the company's earnings. Microsoft's current PE ratio is 35.59, which is pretty high. A high PE ratio can mean the stock is overvalued, meaning investors are paying more for the stock than it's actually earning. This could suggest that the stock price might not grow as fast going forward. Also, some insiders, people who work for Microsoft, have been selling their shares recently. This doesn't always mean something bad, but it can be a warning sign. Insiders often know the company better than anyone, so selling shares might indicate that they don't expect the stock price to go much higher soon. Now let's dive into technical analysis, which is where we look at the stock's price movements to try to predict where it might go to next. Microsoft stock is at the time of recording priced at $417.13. It's almost up 2% over the last month and has gone up by a strong 31.75% in the past year. So, long term, Microsoft stock has been on a solid upward trend, which is great news for investors. But let's zoom in a little. One tool we use is a simple moving average, or SMA, which shows the average stock price over a certain period. Microsoft's 10-day SMA is slightly lower than it was previously, which could be a sign that the stock price might dip in the short term. Another tool we use is a relative strength index, or RSI. This tells us whether a stock is overbought or oversold. If the RSI is too high, above 70, it means the stock might be overbought and the price could drop soon. If it's too low, below 30, it means the stock might be oversold and the price could go up. Microsoft's RSI is currently 69.6, which is right on the edge of being overbought. So while it's not alarming, we should keep an eye on it. Now let's talk about alternative data. This is data that's not directly related to financials, but can still give us clues about how the company is doing. Microsoft's website gets about 1.44 billion visitors a month, which shows steady engagement. Plus, their mobile apps are seeing around 160,000 downloads a day, and that's up 21%, meaning more customers are using Microsoft services and products. So, what's the bottom line? Microsoft is showing solid growth in both revenue and profits. While the high PE ratio and insider selling raise some concerns, the company's long-term performance, strong customer engagement, and efficiency make it a strong candidate for long-term investment. From a technical perspective, the stock's been on an upward trend, but there could be some short-term volatility. For those of you looking to invest in the long haul, Microsoft seems like a strong bet with good potential growth. For short-term traders, however, you might want to keep an eye out on those indicators before making a move. Drop a comment below with your thoughts on Microsoft and let me know what stock you'd like me to analyze next. Thanks for watching.